Now we'll discuss about corporate bond market or a corporate debt securities, or you can call it as a non-government debt securities market. So basically, in this first, we will look after what is corporate debt securities means, what are the various features of corporate debt securities, then how the primary issuance happen for these corporate debt bonds, then how the trading and settlement takes place, and last one is the corporate bond valuation, how the valuation is done for the corporate bond. Now, so start with the corporate debt securities, means the securities which is issued by the corporates. But when I say corporate, here you will have a corporate, non-banking financial corporations, public sector units. All these will be considered as corporate. So anybody other than central government or a state government, if they are issuing the securities, it will form into this. Even if municipalities are issuing the municipal bonds, so they will also form the part of the corporate debt securities. So those are all basically a non-government entities who are issuing the debt securities. And since there are multiple issuers, there are multiple instruments are available, and this issuer will have a separate credit rating. So you will also have a multiple credit rating. So you can see there are huge credit rating because of which uh, non-government securities there is a various kind of issuers, so you will have a credit risk, non-standardization in issuance because of there are multiple issuers and multiple instruments. So because of this market is basically become very fragmented or a illiquid market, since there are lot of issuance, non-standardization of in issuance. There are various standardization has been done in recent periods, like there is a actual by actual coupon basis point, then there is a standardization in face value, standardization for the record dates. So lot of standardization has been done, but still you will have a various non-standardization in terms of the coupon frequency, how the coupon should be paid, then redemption related matters. So because of various kinds of instruments which is issued by this market participants, we will see the various kind of instrument in the next slides. This is predominantly similar to government securities market is a institutional market. So most of the institution only participate in these markets. If I say want to see the issuer point of view, this market is prominently dominated by the financial sectors. So banks, NBFCs, and all other financial institutions are majorly a borrower through a corporate bond, and almost 75% issuance is done by these financial sectors. And if we want to see who are the significant basically players who participate in this market, then mutual funds, insurance companies, and banks are the major participants or a investor in the corporate bond market. Main players are issuer who are issuing the bonds. Uh, Debenture trustee, basically they ensure that the issuance is happen as per the guidelines, and there is a proper payment is for interest and redemption is happening. Qualified institutional bidder is also very important. Basically, institutional investors, there is a rule on a private placement. That's why the differentiation between the QIB and a non-QIB become very, very important in this market. Then individual investor also can participate. And stock exchanges basically do the listing of these securities, and basically they also provide a facility for trading as well as settlement of these securities. Now, again, this listed, unlisted is very important. Listed securities are basically regulated by SEBI. So, listed securities, basically regulated securities, and SEBI is regulating the listed corporate bond. Unlisted securities, if you see, there is no specific regulations, only they are regulated only with regards to Companies Act. But listed securities, you will have a SEBI regulations, you have a Companies Act regulations, and all other regulations. If there is a NBFC or a banks issuing the corporate bond, then they have to also see the regulations given by the Reserve Bank of India. So this is basically all about the corporate bond securities. Now we will see what are the different kinds of instruments. So